I am super, super, super excited to introduce Stacy Rasgon, Bernstein Research. Stacy, how you doing?
I'm good, thanks. Good to be here. Thanks for having me.
Yeah, so Stacy, I don't know who gets on CNBC more, you or Daniel.
Or you, or
I think
you.
I think I'm available when Stacy's not. Like he's going to the bathroom or something. They call me to talk chips on there with Fort. But man, it's great to see you. The first time we met, I think, was at a board of directors dinner for a chip company where we were their entertainment.
This is true. Yeah.
And I think they're entertained. But hey, Stacy, let's talk a little bit about kind of what you do, what you don't do. I mean, I know everybody in the chip space knows you, but we have a pretty broad audience here.
Yeah, you bet. So I'm Stacy Rasgon. I'm a managing director and senior analyst at an equity research firm called Bernstein Research, where I look at the U.S. semiconductor and semiconductor capital equipment space. And so what does that mean, equity research? Because you guys are tech analysts. I know you talk about companies. You do talk about stocks. So I do that as well. There are some other considerations, though. I also explicitly put out ratings and target prices on stocks. I articulate investment conclusions for those stocks, and I write about those to my clients. Now, that being said, I also do a lot of what you guys do. I spend my time immersed in the tech supply chain and the semi supply chain. And my background, for those in the audience that don't know, I used to be on the technical side. So I have a PhD in chemical engineering. I used to build semiconductor manufacturing equipment, plasma etchers. My PhD thesis is on the plasma etch transfers roughness down feature sidewalls during semiconductor manufacturing. And I did work at IBM TJ Watson back in the days in their advanced lithography and processes group. Then I went, actually, instead of going directly into the industry, I went into McKinsey instead. And I spent my time at McKinsey doing business consulting for semiconductor companies. And now I'm on Wall Street and I look at semiconductor stocks. So
I love it. So
it's fun. I've been doing this 16 years now. This is the longest I've ever been anywhere. And, it's still fun.
Stacy, thanks for coming on. Question I get, and then we're going to jump into Intel, AMD, and Qualcomm is how long is your time frame of interest? Is it 5 years, 10 years, 3 years? How far does it go out? Because I think that's going to be important for this conversation.
So theoretically, target prices that I said are supposed to be a 12-month target price. So setting a target price a year. Now that being said, in this space, like you can't constrain yourself to. I've got, and it really depends on my clients. So I have clients who may just care about the next data point.
Yeah.
Right. It may just be the next week or the next month or next quarter. I've got clients that have a 5-year or 10-year horizon. Right. And so you need to be able to sort of dial in and out depending on who you're talking to and have a point of view across a variety of timescales. But in theory, the target prices, because you got to put a stake in the ground somehow. In theory, that is a 12-month target when I do put out target prices and ratings.
I love it, man. Yeah, I don't tell many people. I actually have a finance degree, and I was supposed to be in Wall Street, but I picked a tech instead. So, hey, let's jump in here. So,
did you have a real job?
I used to have a real job too. Dan loves when I point that out because
I never did. Because that's the joke.
I don't know, Dan. You just kind of had a real job, or you were CEO of a distributor. Okay. Hey, let's dive in. Let's do easiest first.
Yeah.
So Qualcomm, Stacy, big upside in automotive, smartphone, better than maybe some expected. So what were your thoughts on what does your note talk about?
Yeah. So it was a good print. And so Qualcomm has been an interesting, just stock. It was death most of last year, as were most of the smartphone names.
Yeah. And
it wasn't anybody's fault. It wasn't anything that them or frankly any of the other folks in that industry were doing badly. It was just smartphones were horrendous. Right? They didn't really benefit like PCs during COVID had a lot of pull forward, and for a while we had a lot of demand. Smartphones, we didn't really see that. And in fact, demand was worse. I think smartphone shipments were down 8 quarters in a row.
Right, exactly.
Most of 22 and 23, and the semiconductors, especially in 23, there was just too much inventory out there, so they wound up under shipping that low demand. It was just awful. Smartphones, however, bottomed, near the end of last year, and that's actually was very good for most of these smartphone names. And they had a really big bounce. Earnings went up, and the multiples went up, and the stocks were pretty good over the last 6 months. Going into this print, people were getting a little more nervous. There were some signs, people were worried about Apple shipments and everything else. Qualcomm kind of took their pain last year. They're more exposed to the premium Android tiers.
Yeah.
They had some inventory correction last year, which has kind of bottomed out for them. And so they were able to put up some better numbers, I think, than some of the other companies were. The other area where they're really, really benefiting is content. And this is where I'm actually starting to warm up more to some of those longer term horizon kind of things. I'm getting more bullish on the prospect for AI smartphones. And by the way,
there we go. Now you're talking my love language, Stacy.
Hang on, maybe or maybe not. I am not bullish on AI smartphones per se, in the sense that I do not believe that anybody is going to run out and buy an AI smartphone where they were not going to buy a smartphone already. I am not convinced that it will drive an upgrade cycle yet. However, it should drive content. And this is something where Qualcomm's actually benefited a lot. And in fact, if you look, the whole 5G cycle didn't drive any kind of upgrade cycle. In fact, smartphones are down, 20 or 30% off the peak during the whole 5G cycle. Qualcomm's chipset revenues, however, grew at a 20% CAGR.
Yeah.
While smartphones were collapsing on the back of content increase, as well as some other things. You mentioned auto and everything, but content's gone up a ton. And I actually am getting more and more convinced that at least AI can continue those kind of content trends. And I do think when people do buy a smartphone, they will buy an AI smartphone, because that is what will be for sale. Now, I also think Qualcomm has been doing a lot more on the ecosystem work for AI smartphones, whether it's software support, OS support, SDKs, pre-trained models. They've got a whole website with a ton of pre-trained models that are optimized to run on Qualcomm silicon, and nobody else in the supply chain is really doing that kind of optimization. So they recognize that there needs to be use cases and killer apps for this, and we'll see if that happens or not, but they're doing what they can to try to create that ecosystem within this space is really important. So I'm starting to really warm up to that thesis. And look, if there is a killer app, maybe Apple comes up with something that everybody has to do, and if it drives an upgrade cycle, even better. That'd be great.
Yeah, we have Google's big conference coming up next week, where they would likely drop something about what they're doing in Android. And I think, by the way, all this discussion is very understandable, because we haven't seen what Google, what Microsoft, we haven't seen exactly what they're going to be bringing out. We have Build coming up in a couple of weeks, and we're going to see this. We have WWDC coming up that should talk about that. So
you mentioned Computex.
Forget that.
Yeah. Dan is going to be in Computex. I am not.
I'm going to be sweating profusely in Taiwan.
I will not be there, unfortunately.
Guys, I will carry the water for you.
Congratulations, Dan.
Again, carry your bags, anything just to be in this kind of in this circle. Can I just hang with you guys?
Yeah. So hey, just a final quickie on Qualcomm. They have this $45 billion auto backlog.
Yes.
Definitely, big growth for the quarter, but definitely out of your 1 year target here. Like it goes out 8 years, I think, is their
yes.
How do you factor that in, Stacy?
Yeah, you bet. So they've given some medium term as well as longer term targets for revenues. What they've said is they think they can do more than $4 billion by fiscal year 26, which is actually the out year of my forecast period.
Yeah.
And more than $9 billion by fiscal year 2030. So those are the targets they've given. They're running right now a little under $2.5 billion. So it's growing a lot. So they're kind of on that glide path to hit those numbers. And what they said was, the last time they'd given up a pipeline number was 30 billion a year and a half ago, whenever it was, and now they've taken up to 45 billion. They are not taking those targets up yet, but what they said is we feel even better about hitting those targets. And it's looking really good. So those are, I've got a glide path in my numbers for something that looks like that.
And the real revenue, Stacy, has been pretty impressive too. Because that's been the thing, is some of these kind of pipeline numbers, and then you'll hear why?
Yeah, you never know, right?
But you're seeing kind of that trajectory of actual revenue that's showing up in that business. It sort of seems like the ramp is calibrated.
Yeah. You got to remember, when people give a pipeline, those are engagements. You never quite know how much of that's going to actually convert into actual orders. You don't know over what time frame. I mean, it could be 45 billion over 30 years. Like who knows, right? It's not going to be that long, but in general, when companies talk about pipelines, they tend to leave those details out. At least Qualcomm is putting up, very reasonable revenue numbers, like along order numbers or pipeline numbers that look like that.
Hey, let's bounce to AMD. EPS
Yeah.
beat, revenue, small little beat, outlooks lower than expected. Your headline in your report was not awful, but not awful, as in full of awe.
Yes.
Was that actually his headline?
Yes.
Oh, nice. All right. Well done.
Just wait for the Intel one.
Yeah. By the way, I should say, like we were talking earlier, titles are really important. Like my clients get, like 1,000 emails from folks like me every single day. You got to give them some reason to click. And so like titles are, I spend a lot of time on the titles. So AMD, the stock has been tougher recently, although I think year over year, it's still pretty good. It had a big ramp up last year in the wake of NVIDIA's, when NVIDIA kind of blew the doors off the car in May of last year and really got the whole generative AI cycle going, and AI and AMD, at least from a narrative standpoint, has been benefiting from that. The stock has sold off a bit off the peak, and it partially because it's a few reasons. I mean, one was their core business has not been great, and this is, by the way, we haven't talked about the broader cycle. Semis, there's a lot of overhang that they're working off from the COVID years. AMD and their core business is getting hit by that, and the AI piece for them, as sizable as it is for them, has not been enough to offset some of the weakness in the core business. Plus, I would also argue in the context of the overall AI opportunity from some of their peers like NVIDIA are seeing, even the multi-billion dollar numbers that AMD is putting out are fairly small in that context. I mean, NVIDIA might do $100 billion in data center revenues this year. AMD is guiding for 4+, right? I mean, it's not that. Although AMD, to their credit, they don't have to do $100 billion in revenue this year. The issue with AMD stock, and it did sell off the print, it was kind of like inline-ish, which the stock is fairly expensive, and like in line in that context isn't always enough. The core business was weak, in particular, what they call embedded, which is mostly the Xilinx business that they bought a little while back, and their gaming business were already weak and getting weaker. It's some of those cyclical issues. And the AI piece, they took it up modestly. Their prior guide had been more than 3.5. Now it's more than 4. And so that was kind of like expectations are already there or more. So it just wasn't enough. Now, I will be honest. We've been a little more like lukewarm on the thesis, but I didn't, again, to the title, I didn't think the quarter was all that bad, right? In the grand scheme of things. They are still like their core client and data center businesses. They're not super because the markets are not super, but they were not horrible.
Right.
They're clearly taking share from Intel. We'll probably talk about Intel. Intel had suggested when they reported, a week or so before that they thought they held share. They clearly did not hold share. Like AMD still took share. And those the embedded and other weaknesses, presumably that some of it's cyclical. Eventually, that will hopefully come back. And the AI numbers, they were in line, but I mean, it's like they're still growing. Like it's not awful. But like not awful isn't quite enough. Like when expectations are high.
It's not awful.
Yeah, this is something that people sometimes get confused when they look at how stocks trade in the wake of earnings. Like, and I'll see sometimes, Pat, even I'll see tweets from you and be like, oh yeah, the earnings were great and the stock's down a ton. Maybe it's the guidance that was bad.
Yeah.
Maybe it was the expectation. It can be great, but expectations are much higher. Like the real question is, how are they performing relative, not to my expectations or my peers' expectations, but my clients' expectations, the folks that are actually doing the investments themselves. Those expectations are not written down, right? Part of my job, by the way, is to figure out what those expectations actually are. But you can get a good idea of where they are relative to the numbers, like by observing what happens with the stock when these guys report. So yeah, that's what happened with them this quarter.
I know you might not be able to comment on this, Stacy, but my take on it all is that NVIDIA is setting the expectations of pretty much every data center chip company on the planet right now. And the comparative is, well, we're expecting NVIDIA's 875% growth. I joke, but like on G. So Lisa comes out and raises the number, 3.5 to 4, but people they wanted her to raise to 5 or 6.
But you got to remember, so like last quarter, they raised it from 2 to 3.5 and the stock went down. Why?
Right.
Expectations for AMD going to last quarter was that they would do 8 to 10.
Right.
Right.
There was no number big enough.
So they lowered it to 3.5, like this is the quarter before. That was good because you want to get expectations down. And so they lowered it to 3.5, but people still think they might do 5 or 6. So now they raise it to 4, great, but people are still thinking they might do 5 or 6. They've only got 2 quarters left now.
Yeah, I think that's where I was trying to go. Was basically there was no big enough number that she could have said. If she said 6, they would have been like, why not 8? I mean, it was
remember, you have to remember they're relatively small. There were other constraints. Like part of the issue for the whole space has been supply constraints, right? I mean, these guys are all ramping it up a ton. Remember, you don't just snap your fingers and the chips appear, right? You have to make them, and you have to put the infrastructure and capacity in place to manufacture them. And that takes time, and it's very difficult to kind of gauge. And AMD, because they are smaller, like NVIDIA's pre-buying a lot of this capacity. Like there are limits to like how much. Like even if AMD, and I don't know but even if AMD had demand for $50 billion worth of parts this year, there's no way they could supply anything like that, right? They're probably doing the best they can. And again, it's not bad. Like, I mean, this business was zero, just a few quarters ago, like a year ago, right? So, I mean, even to grow it to $4 billion in a year from nothing is not a bad thing necessarily.
Yeah, I'm going to end on AMD. In December, I said $6 billion, and we're going to see where that ends up. And that was.
It's not an insane number. It probably won't be 10 this year.
Yeah.
But what they said is what AMD said is they will have supply in the back half to generate upside to that number if the demand is there. It's kind of what they said.
It's good. So let's pop to Intel. So Intel, big EPS beat for the quarter, improved gross margins, lower than expected top line, and a lower forecast.
He's cringing.
Stacy, your note was "quote unquote, hello darkness, my friend. I've come to talk with you again."
Yeah, they're in a tough spot, right? They know it. I've said prior is this was always going to happen. It took 10 years to break it. Like it's going to take 10 years to fix it. And Intel had a foundry. They did this. There's a few things that are going on with Intel. One is just their numbers have been bad. They just have. I mean, it is what it is. Again, we can talk about some of the dynamics. The PC market has not been great. There was a lot of channel impact during COVID. They were over shipping. You had a massive inventory correction. I think they've actually been over shipping again the last couple of quarters. Both, so that has impact for the forward trajectory of their client business. Plus, they're losing share in servers. Plus, traditional data center. In the wake of all the AI strength, traditional data center has been quite weak. Server chips and networking and that sense. So that's been impacting them. They're impacted on their Altera business. The same issues with AMD's embedded business, like that. That's very weak. So they've got like issues just in general, near-term cyclical issues in their business. Longer term potential structural issues around like share losses to AMD, and then now maybe AI and accelerators taking share from traditional data centers. They don't have anywhere near the AI or accelerator story that some of their peers do. So you don't have that. And now they have this foundry business that they're trying to build. They're investing a ton of money. They don't really have, right? They're burning cash, right? They did a foundry day a few weeks ago where they kind of like showed us the economics of the two businesses, the product piece of the company, the foundry business. The foundry business economics are, I think, unsurprisingly horrendous. They lost $7 billion last year, which was not surprising. What I found surprising was the foundry losses are going to get even worse this year. That's in the wake of them potentially, supposedly they cut $3 billion in cost last year, and presumably the revenues are getting better. So what it tells you is there's some real structural issues. My biggest takeaway from the Foundry Day was come back in 2030. I mean, again, they gave some medium-term and longer-term models for margins and numbers, which I still think look aggressive, personally. And even if you believe them, they basically said this is going to look like a horror show for the next 3, 4, 5 years at least. So even if you believe in that long-term, and I can construct a bull case if you wanted to for what that long-term could look like. But I mean, it's a long ways out. It's hard, right? This is why the stock has been selling off. And then we had the Huawei news like the other day, right?
Yeah, we're gonna dive into that. So, Stacy, what would you have to see from Foundry and when for it to make a change?
I mean, you want to see volumes, right? Again, they've announced customers and engagements, which is fine. But again, by their own, they showed their own forecasts. They're not expecting any sort of material revenues till the latter half of the decade.
Yeah.
In Foundry, and it's still an open question, but I don't doubt that they've got a ton of engagements. I think anybody that's looking for leading edge process technology is going to be looking at them. Why wouldn't you? Like everybody wants second sources. The whole like geopolitical question and like how sustainable is having the world's leading edge manufacturing in Taiwan, that is a real worry.
Right.
I understand all of this, but I mean, these are not problems that like you can't just throw money at these problems and fix them.
Well, they're long term. I mean, the tech has to be there. But, hey, Stacy, it's going to be getting advanced EUV machines. That's what it's all about. Didn't you read the memo?
Yeah, the high NA. I mean, that has
exactly.
That has a whole other set of issues that we could talk about. Now, but I will say, like back in the days when Intel was actually at the forefront of new innovations, they were actually doing better. So you can think they were the first ones to do like silicon germanium, and the first ones to do high K metal gate, the first ones to do FinFETs, right? And those were phenomenal for them, right? You could make the argument that when they stopped, like when part of their big issue, when they had the problems going to 10 nanometers, and is they didn't want to use EUV. They decided they could do it using multiple patterning, and as it turns out, they were wrong. In the meantime, TSMC like aggressively went after EUV, and you know how this works. It's a learning curve.
BK to the end was saying that EUV didn't work, and TSMC got it to work. So Stacy, let's bounce. And Dan,
we'll see what high NA does for them. Yeah, there are other issues with high NA
as we move into the. Oh, sorry. Go ahead.
We'll see. But I mean, again, call me in a few years. I mean, it's going to be a slog, and I think it was always going to be a slog.
Yeah, as we move into the back end of this and get into our topics of the week. By the way, thanks, Stacy, for giving us the rundown. Pat and I did this last week, so everybody out there want to check out our comments compared to Stacy's, and then send Pat and I a note and let us know how great we did or how great we didn't do. But the one thing I said is I talked to Bloomberg this week about Intel, and they basically asked me the question, like in the near term, is there any reason to invest? Boy, was that a hard question to answer, because I think what you said was exactly what I said, is there is a really kind of compelling long tail, but the short tail is really hard.
It's tough. So it goes back to your question on what's your horizon, right? I mean, it depends. And look, I mean, the book value is, I don't know, $27 a share. It's not that far off of there. Right. I mean, they're burning book value, they're burning cash, although they're getting subsidies. And again, I can argue the geopolitical benefits, but it's probably going to be a slog.
Yeah, I'm interested. I'm interested to see when we have a TSMC created compute tile. So it's kind of mono with AMD. Now on the cost side, that isn't good. But on the competitive side and getting back market share, I see that as a positive. And by the way, the company has moved from a completely monolithic design to distributed. And theoretically, that means your net good die per wafer.
You're doing the wrong thing. What is Pat's alternative? It's to lay down and die.
Exactly. And some people are like, oh, they need new leadership, or they need to split.
It's like exactly what he said. I think his biggest error was how he set expectations. So he came in and he was like really a cheerleader. He said everything's fixed and it's going to be great. They had an analyst day in 22 where they put out targets that were like outlandish. But you also have to remember, like investors, we're not the only audience for what he says, right? It's also the U.S. government and its employees and its customers and its suppliers, and like you got to keep the boat from totally sinking, even though there's a hole in it, right? I mean, he has to, maintain all of that. Like, so the investors themselves are not the only audience for the messaging. But I mean, at some point you've got to put up or shut up. And like, we're at that point now where like everything is now starting to hit him. I think it was always going to be like this, personally.
Right.
We're just at that point now. They're going to have to get through. It's going to be a while.